Good morning, everyone. My name is Cynthia Turrieta, covering your weekly consulting highlights. And the buzz right now is Target Corporation's interest in joining forces with either Ulta Beauty or Canadian Tire as a means to hopefully solve their issue of slowed revenue, which has dropped below pre-COVID levels. Today, we'll be taking a dive into each of these possibilities as represented by our colleagues, Amaryllis Ambris and Stephen Cosgrove. Let's go ahead and get started with Canadian Tire. Go ahead, Stephen.
Thank you, Cynthia. I'm happy to be reporting out on our Target M&A fit framework analysis. I'll start by sharing the deck. All right, so getting right into it. Cynthia, as you alluded to earlier, Target has a serious revenue growth rate problem. In the last fiscal year, Target grew revenue by only 2.9%, a stark decline from the double-digit growth rates it saw the 2 years prior, and in fact, below its pre-COVID growth rate levels. So first, we looked at how is Target growing revenue today, and we found there are one of two levers Target is pulling. The first are comp sales or sales at existing stores. The second is the opening of new stores. When looking at comp sales, we found they were flat. Target grew comp sales only by 0.5% in the last fiscal year. And then looking at new stores, well, those weren't impressive either. In fact, in the last year, Target only opened 20 new stores. And we thought, well, this could be because Target has 1,900 locations across the US. So competition for prime real estate is intense, but also you can only open so many new stores before cannibalization becomes a real problem. So we thought there must be a third option. And that third option is M&A. So we looked at two firms. One, Ulta Beauty, a beauty retailer located in the United States. And two, Canadian Tire, Canada's second largest general merchandise retailer. So getting into the M&A framework, when looking at operational, cultural, and strategic fit, we found that both firms were comparable. However, Ulta Beauty edged slightly ahead of Canadian Tire. But since Target's issue here is revenue growth rate, we wanted to look at the financial fit a little bit closer. Now, if you're of the John Joseph state of mind, you're probably thinking, okay, accretion, dilution, let's look at these. Canadian Tire, 14.6%, Ulta Beauty, 1.3%. I personally wouldn't get out of bed for anything less than 5%. However, there's more than meets the eye here. So keep in mind, with Target's problem being revenue growth rate, we wanted to look at the CAGR as well, not the college CAGR with fun and beer, but the 5-year CAGR for Ulta Beauty and Canadian Tire. And we found that Ulta Beauty had an impressive 51.9% 5-year CAGR versus Canadian Tire with only 26.7%. And in fact, within those 5 years, Canadian Tire actually saw a 1-year revenue decline. So we thought if we are trying to find a company that has sustainable growth over the next several years that can really turn around Target's revenue growth rate problem, we ultimately decided that Ulta Beauty was the winner. So now I'll pass it off to Amaryllis to dive into Ulta Beauty.
Thank you, Stephen and Cynthia. As presented in our consulting report, we believe Target should acquire Ulta Beauty. By leveraging the power of these two iconic brands, you have the opportunity to drive revenue growth and strengthen Target's competitive position in a highly profitable market. The beauty industry is a thriving one. It's estimated worth $532 billion globally, but projected to reach $784 billion by 2027. Ulta is already recognized as a leader in this industry. It has consistently delivered exceptional financial performance, and it has reported annual revenues of over $10 billion. So this proven ability to generate high profits showcases its efficiency in capturing consumer demand and cultivating that customer loyalty. The integration between Ulta and Target presents a significant financial opportunity that will help bring economies of scale, shared operational efficiencies, optimizing costs, cross-selling opportunities, creating new revenue streams, and unlocking incremental value. The reputation that Ulta has in offering extensive range of beauty products is coupled with Target's customer-centric approach. These both will resonate strongly with both Target and Ulta customers. It will foster loyalty and drive increased foot traffic. Target's reputation for affordability and Ulta's beauty expertise will create a powerful customer proposition, driving growth and market share. We are confident that this strategic move will yield substantial financial benefits for Target. Thank you.
No, thank you, Amaryllis and Steven. Clearly, Target's issue of slow revenue growth can be resolved by Ulta, an already vetted partner who is a proven driver of revenue. Well, that's it for this week's consulting highlight. We hope it was as inspiring for you as that check from Target will be for us. Enjoy the rest of your quarter and happy graduation, class of 2023.